to a special edition of Palisades Gold Radio. I'm your host, Tom Bodrovics, joined by the market sniper himself, Francis Hunt. And we're on the road together here in South Africa. We were on a motorcycle trip together, which I was lucky enough to be invited on by Francis to come and spend 10 days exploring Africa. And we started in South Africa, in Johannesburg, and rode about 1,200 miles or 1,800 kilometers through Zimbabwe. So we started in South Africa. What was the second country we went to, Francis?
Botswana, and then we popped over into Zimbabwe for Lake Kariba and the Victoria Falls, all the way through Zimbabwe for Kariba, which is right in the north, borderline Zambia, and then we moved across with that to the actual Victoria Falls.
Yeah, so we spent a couple days in South Africa, crossed the border, spent one night in Botswana, and then spent the rest of our time in Zimbabwe, which for anybody that has paid attention to the crazy inflation that they've had there, that was quite the experience as well. And we'll talk a little bit about that. We'll talk a little bit about kind of the behavior of gold right now, the behavior of the bond markets, maybe a little bit about the narrative around all of these different things. But we have quite a long drive here today, and we're just discussing a lot of this stuff back and forth, and we thought we should actually record some of it and get it on tape. So maybe, Francis, we can start by giving the listeners a little bit of a background on your time here and how this whole kind of trip came together.
Yes, so I was born in South Africa, and I'm around about 32 years old. I moved to the UK for 20 years and worked there. So the Southern African experience is pretty unique and well known. The history of neighboring countries such as Zimbabwe that we visited is also something I lived and saw firsthand. The other thing that's very interesting that came up on our Zimbabwe tour, that in terms of history, was the diamond industry. We're passing through the Karoo right now, which is a semi-desert. Some beautiful scenery, maybe out the back of the car. I'm not quite sure that our viewers will get to see too much of that, but the diamond industry, how it was captured, was kind of interesting. It might be fun to visit, Tom. And then how that moved up to the gold industry itself. At one point, South Africa was a 1,000-ton per year producer in the gold industry. Many people may be aware of that. And during that period, funny enough, it was around 72 cents South African rands to the Great British Pound, and twice $1. So in other words, a rand bought you $2. Now, currency-wise, it's as near as damn it to 20 the other way. So that's also a very interesting commentary on management of nation states, and maybe if you wanted, Tom, you can take us, if you want to pursue that further, you can ask. But it's been a great tour, and thanks for riding. Tom's a heck of a rider, by the way, on a bike, for those of you that don't know. And he very kindly was giving me a service on the bike, and we had a fantastic tour. But what was also interesting, as I felt, we visited the grave of Malopo. In Malopo was the grave of Cecil John Rhodes. I've done a separate video for that. Guys can go check it out in the Market Sniper if they are interested. But his role in bringing under the City of London cartels, essentially the resource industries, and how the British Empire had this continual need, because they'd committed to a nursery banking lending system to secure new resources to continue to service debt, etc., and eventually how that died, and how the American era has come about, and where we are now in terms of America's cycle in that as well. So very historic on a number of levels. Cecil John Rhodes was a Freemason in the UK and established the Bulawayo Freemasonry as part of his commitment to Crown, which often means the bank and the advisory system behind Queen and Country. So there's so much to dig down on, but I'll let you choose where you want to jump in, Tom.
Well, I was thinking, as we were reading the history on Cecil John Rhodes, the thing that struck me was the establishment of basically a monopoly on the whole diamond and really the whole commodity and resources industry in there. And it's interesting that you bring up the idea that he was a Freemason, because when we were discussing that the other night on over dinner, it was really the financing that started backing him provided him with the ability to really capture that industry and really start buying up a lot of those properties, a lot of those resources. And even in the standard, let's say, posters that are all around his gravesite, because he is well renowned and kind of a national hero of sorts there. Even at that, it says that that was his goal, was establishing a monopoly. So, I think that goes back to the idea again of how these narratives are built, how these structures are built, that it's not really ever done by accident. There's always some type of greater power seemingly behind a lot of these institutions and how they came about, right?
100%. If you have a very strong American and Canadian audience, and they'll be very familiar with the Rockefeller capture of the oil markets in the United States. And what you're actually looking at is a similar template. It's a rollout. It's templated pattern behavior. There's nothing new in the world in terms of how a funded Cecil Rhodes, and it went right back to the great families, the Dutch East India Company and all of that, and the City of London and the big families that stand behind that in both Amsterdam and in London, that saw to it that he literally bought out all the small holdings. There's just for a little bit of South African history, and maybe some of your US viewers and Canadian viewers would not be familiar with this, but there was a famous negotiation with Barney Bonotto, who actually was a name changer. He was an Isaacson, he was Jewish, who had captured the other half, essentially, of Kimberley. And there was a tent negotiation that saw the biggest check written in the world, which eventually saw Barney Bonotto relent and sell all his diamonds fields that he had, and saw essentially it go from a duopoly into a full-blown, not even an oligopoly, but an absolute monopoly of the diamond industry in Southern Africa. And Cecil John Rhodes had activity in Zimbabwe, so I'd say the Southern Africa specifically, because this is not just a South African history. Of course, Kimberley was a large part of that. The Cullinan diamond, which was found in Cullinan in Pretoria, the largest diamond ever found, sits in the Queen's Crown today. So all these resources went back to Queen and the banking cartel behind that. That's that one diamond, very much a figurative element, but it actually is a proxy or symbol of the capture, very much in the competitionist mold. There could not even be allowed a duopoly. If you didn't control the other half had to be bought out. And it is very similar to what American history will know and understand around Rockefeller oil.
Yeah, and it's I've traveled quite a bit around the world, and I remember going to the Vatican at one point and seeing all the resources that you're allowed to see. Never mind all of the library and all of the great treasures of the world that were in a lot of ways plundered and all ended up back at the Vatican. It's interesting to think about what would be in terms of resources brought back to England and the Queen as well.
100%, yes. And also a lot of, if you're talking about Egypt and artifacts, all sorts of things. So there was this tendency of plunder and repatriation to the core, with possession being 9/10 of the law, being part of it. But just moving on into gold, what people have to understand in terms of the history of South Africa, Van Riebeeck was not the first. In fact, Bartholomew Dias, a Portuguese, was the first to round all of Africa that is acknowledged. As I say, with history, it's the best account we have. I wouldn't say unquestionably. He was Portuguese, and that was very much symbolic of, people have been watching Ray Dalio's work, he'll talk about the Portuguese Empire. Then it was the Dutch. So Van Riebeeck was of the Dutch side, and he was largely a clerk and didn't want to go. He was sent to a far-off land to establish a vegetable garden essentially for the Dutch East India Company that was doing the trade with China and India for spices and silks. And that, of course, they were running deficits there. And that's why we got the Opium Wars, because they then decided to start addicting the Chinese population, and that's the Hong Kong history. That was British mandate for so long, to ensure that they had a market of something that they could sell. So the Opium Wars ended up seeing everyday British soldiers being sent to die and fight drugged up Chinese armies to assert the right to sell drugs to a country against their citizens' best interests and their culture's best interests, just so that we could have a product to market when we were purchasing very delicate artifacts and silks and from a very cultured and advanced society. So they needed a vegetable garden on the way because the sailors were getting scurvy. So bringing the South African aspect back in it was the Cape of Storms. There was no Suez Canal during that period. And it's actually very violent. And they changed the name from the Cape of Storms because they considered it bad marketing and PR at the end, to the Cape of Good Hope. In other words, instead of getting battered and almost likely sunk in your wooden ship there, rather let's just hope for the best, the Cape of Good Hope. But it was a vegetable garden to prevent scurvy, which was a disease that was brought about by a lack of insufficient vitamins for what was an incredibly long journey. Just as another interesting sidebar, many people don't realize that the entire insurance industry's phraseology and terminology is derived from the derivative markets that actually started by the Dutch East India Company cartel in the Amsterdam coffee shops and the London coffee shops, because these wealthy families would want to secure. Such was the risk. You had quite a high likelihood that your ship got sunk and you lost all your cargo. And of course, you had invested in the construction of the vehicle, choosing captains, and many runaways in the UK and orphan boys were put under pretty dire working conditions to be sailors on the ship. You know, the floggings and the discipline, maritime law. There's a lot of sidebars that can be done on this. That was all ceded back to Dutch East India Company and the great families of Europe, which I include the UK very much in that. But anyway, the derivative markets, the whole notion of options markets as well, leans on. You pay a premium in the option markets that is based on, very similar to insurance speak, which was based on the principles of people wanting to hedge their bets on their wooden ship, making it around the Cape of Storms to bring back the cargo that would further enrich them, that they would sell at massive margins because it was rare, scarce, and not readily available from the Far East in the European markets to kings, queens, and other wealthy families. So it's quite there's so much deep dive history on there that we could lose ourselves in it. But it's absolutely fascinating. So the Cape started as that, and we were of course heading to Cape Town. Rhodes died in Muizenberg, which is on the warm coast side of False Bay, but he asked to be buried in what he considered one of the most magnificent places that he'd visit, and that was the Malopo Hills that you and I now visited. Maybe in the edit we can pop a picture in there for there. We stayed in the Malopo Hills, beautiful. The rocks are unbelievable, and he remarked one of the most amazing places to sit and reflect. And there was this sort of bench on this rock mass up on the hills, and they buried him there by his request. And in actual fact, he traveled by train. His coffin traveled by train. And many people were brought out to wish well all the way through Southern Africa as he made his journey to be buried there. So people don't realize what a massive man he was for the cartel in terms of securing Southern African and what the biggest gold producer and diamond producer of the Southern Africa, and it extended to Zimbabwe. And in actual fact, it was known as Rhodesia at the time, and it was actually known as Southern Rhodesia because Zambia, now known as Zambia today, was actually Northern Rhodesia. So both Zambia and Zimbabwe actually carried Cecil John Rhodes' name. So many people outside of Southern Africa will not know this history of what a big cohort of a man he was. And he died only just through his 50s. So he did all of this in quite a short time. He established the British South African company. It was literally called that, and he was very well funded. That is a very clear thing. He was very, very well funded to enact the agenda of the cartel and to ensure their interests and their seizure of those industries.
So, Francis, having, let's say, seen the contrast between South Africa, which produced a lot of gold, and Zimbabwe, and we touched on the idea that at one time the South African rand was worth $2, and now it's about 20 rand to $1. Considering that they were a huge producer of gold, and obviously they have a pretty good amount of resources, how does a country, or how did South Africa in particular, and we'll move on to Zimbabwe after, how did they start going down this road where they've devalued their currency so much?
Yes, so mining efficiency. So we have some of the deepest mines here, and we pursued that birthright, great gift, to quite an extensive degree, and we were leading the world in terms of depth of mines. I think someone, I stand corrected, but I think there's 2 kilometers deep mines in Southern Africa, and it still stands as probably the record. I speak under correction, and if anyone wants to comment on the videos, if someone's gone deeper since, do. But I still believe that we have the deepest mine. So we really maxed out that, and the easy pickings started to dry up. And the problem with many resource-rich countries is they don't sufficiently develop other aspects like services and technology. That said, today there is a core and a slice of South Africa that is very good in the tech space, but it's certainly a long way, it sits a long way south of what Silicon Valley has done. Also, of course, there was the apartheid policy that saw isolation occur with sanctions that were very damaging long term, and the then nationalist government withheld making any meaningful change for an extended period. So you actually sat in a system whereby you were continually battling. There were many black deals that had to be done behind closed doors. These were invariably more expensive. It became a matter where our exports no longer matched our imports. And of course, the new governments that have taken have not exactly been bastions of prudence. In fact, they've exacerbated this tendency and trend. So we've got to a point where South Africa currency, in terms of the risk premium, there's a big population demographic that is very, very still, if you go back to the 1900s, were pretty tribal, polygamous. There was quite a lot of multiple wives. In fact, Jacob Zuma recently was a president, and he went to visit the Queen, and he had there was the big question, which of your wives are you taking? As a Zulu, they almost every birthday get to choose a new wife, and some of them have multitudes of wives. So there's an old tribal customary element which has not necessarily made the step up to what we'd call the first world Western standards. And we've just lagged, basically, and we've misappropriated. There's also been an immense amount of corruption and malinvestment or non-investment. So we're known for having power outages now, when at one point Eskom was the biggest success story. It's now the biggest embarrassment, largely, because we used to export power to the other Southern African nations. And now we're in a position where actually we brought a lot of people on grid, many of them not paying, because there's a culture of non-payment. This was part of the struggle as it's determined in Southern Africa. So, there's a lot that can be said about what we've done to undermine our financial standing in the world. A crime and risk premium invariably also requires a lot greater return, means capital costs more, and as a result, borrowing costs are always artificially high because we're close to recession, because if the currency collapses, so they have to keep interest rates a lot higher, so growth isn't as good. There was no low interest rate environment to the degree that you got in the States and Europe as a result of all of that history catching up with us.
Yeah, I found it a very sobering reminder. We stayed at a very nice place for a couple days in Johannesburg, a friend of yours at his little acreage, and I take for granted every day that my lights work, that I have water coming out of my tap, and I'm sure we'll get into some kind of reset ideas as well. But the idea that you can just hit your light switch every day and the power comes on reliably, and it's a major inconvenience if you ever have a small power outage that might last an hour or two. I've had podcasts. I had a podcast 2 weeks ago with Adrian Day. He's in Puerto Rico. The power was out in his apartment, so he had to go down to the coffee shop to do his recording. It's not something you take for granted in a major city like Johannesburg. And then the following day, the water and the power were both out.
Yeah.
And it just, that's an everyday, piece of life that you have to contend with, that you have to think about, kind of plan ahead for, to have some type of backup power, to have some solar power.
Can I comment on that? Because there's a disadvantage chronically to living in that environment, and our industry has certainly suffered. You can't do mining without needing energy. You're breaking rocks, you're digging holes. And that's been damaging and adds to your previous question. But for the reset thinking, I would somewhat say that in a certain way, the people here are hardier and better prepared already. You noticed how the solar panels were all in, the battery backups were generally all in. We had a bit of a unique set of circumstances where a local transformer went, another example of non-understanding of required maintenance in the new government that probably didn't really have training and educational level to truly appreciate how much has to be reinvested just to maintain what you already have. We saw in Zimbabwe, we were riding on Ian Smith era roads, which was pre the flipping of the Mugabe, the beginning of the Mugabe regime, and it was worse riding on the road than riding on the sand alongside it. So you had this bizarre scenario of tarmac and such huge potholes that were so damaging. And we were on off-road dirt bikes. We actually elected to ride in the soft sand, and there were 2 laners on either side of this road.
Well, and to call it a road is kind of interesting. Again, it's something that we take so much for granted in the States and Canada and in these really first world countries. And that's not to say that most of South Africa doesn't feel first world. There's parts of it that very much do, but or let's say Southern Africa, but these what was it, Ian Smith era roads you called them? It's literally 1 lane of pavement, and they got a lot further by only paving 1 lane of actual asphalt and being able to pave, let's say, twice as far with the same amount of resources. And then when the idea was that when an oncoming car would meet you, each car would have to pull off into the dirt so that you can pass by the other. And again, we went by a bitumen mine and a coal mine. You would think that these are very resource, or that these provide energy to the country, to the people that live there. You would think that the infrastructure would be excellent around those mines so that they could get that product out of there. The road was terrible around there. And that's the
with
major
trucks,
part.
a large amount of trucks, because the rail has collapsed, doing further damage, such that the potholes were this deep and incredibly wide, and actually jarring to suspension, that it made it more worthwhile to ride on the dirt. And that there were also a couple of landmarks, just talking the Zimbabwean ruin, there were a couple of landmarks where we had a number of Zimbabweans that had been part of Zimbabwe during the pre-era, and they said this was a beautiful hotel. There was the old lady who played on the piano, people sung and danced, and it had been stripped right down. The beams taken out, it was just broken walls, lit out, everything peeled off, no new investment. There was Halfway House, which was in between Bulawayo and Vic Falls, where we stopped. We couldn't even get a sandwich, a beer, or even a reasonably priced Coke. And it became the joke of the tour. I don't know if you recall, but we asked the guy, so what's happened? They were essentially slaughtering a goat in what used to be the lounge of a hotel. And he said, oh, it's under renovation. And then we got that same answer a couple of times, and everything that was essentially once great and had social memories associated. We were with people that had danced there and played music and
had great service there, had great
filled
memories
their cars and stopped for a lunch, and even nighted over and stayed at the venues where they were absolutely decimated. And it seems like there's been a well-prepared answer that says it's under renovation. Only it's been like that and destroyed for an extended period, and there's no clear evidence that the renovation has started in any way. But it seems like a political answer for explaining a major endemic structural investment failure, that to mask the damage that the government has actually done on how many things that have regressed substantially in it. The one thing I definitely want to make sure before we get into the metals discussion that I want to bring in is that people, in terms of that, so the dollar is a secondary currency in Zimbabwe, and you could almost argue a primary currency. And when we offer to pay electronically for accommodation or any of our expenses with a dollar-based transfer, they say, no, don't do that. And the reason why they said that, and Tom will bear testimony to this, is the current Zimbabwean government, if any USD arrives in local Zimbabweans' bank account, immediately seizes 25% of that United States dollars thing. It's almost like a tax. And this is because they don't sell enough to America. They obviously bring in oil and energy, so they have a deficit situation. Again, like I was describing the great family's deficit with the Chinese and how they then peddled opium to counter that. They have a deficit situation to such an extent that they actually levy 25% instant deduction on any dollars arriving in a Zimbabwean account. And you heard it for your own ears, Tom. Maybe you want to refer to that.
Well, yeah, I think part of that, we stayed at a game reserve, and I overheard the discussion between the guy that booked our accommodations, kind of organized this tour, and the owner of the game reserve, whose business it was. And he said he was even okay with us, buying truck parts as a proxy for payment for him. Anything but depositing actual cash through some type of electronic payment. Those that have heard about the inflation in Zimbabwe, at one point they had, what was it, $100 trillion Zimbabwe note. And we weren't able to get our hands on any of those, unfortunately. They wanted too much money for them.
For the fake money, for the memento.
Yeah,
I just refused to pay $60 for a pair. I wanted to get one for you of the 10 trillion notes. Yeah. I already have, so I wasn't prepared to do that. But they actually know that tourists find it interesting, the degree of the inflation. So they actually have some of the high denomination, ridiculous historical event notes. And as I say, I already have a few, but I wanted to get one for Tom, and then it just turned into a tourist thing, and I just refused to play. But they were offering 10 trillion notes that you could see, serial number. And the interesting other aspect about them is they had expiry dates on them. So such was their understanding and then the level of embedded inflation that they even said this note will cease to be of any value at all, regardless of what denomination you put on, umpteen zeros, beyond a certain date, which just shows once you're in a parabola of this devaluation, it's time sensitive. It becomes so time sensitive. The power of compounding is so vast and so big, you can't even compete with it. You actually have to reissue, knock 6 zeros off and start again. On that point, Tom, you mentioned, and I think you should bring it in, and I'll let you bring it in. They introduced the Zimbabwean dollar. Just go over with your audience, because I think they'll find that detail very interesting as well. What its valuation and how it panned out.
Yeah, so we were fishing with one of the guys in Zimbabwe, and we were fishing on Lake Kariba. It was a fairly successful day, and in the evening fish, actually. The morning wasn't so much so, but either way, it was really interesting to see. We saw some hippos, some alligators, or crocs. I can't remember which one.
Crocs, yeah.
Crocs, yeah.
Africa, yeah.
And so we got into this discussion with the captain of the boat there, And we were asking him how they pay for things now, because he was kind of, saying the same thing about US dollars and 25% being taken off the top if he gets paid into his account from any USD source. So they introduced this Zimbabwe dollar at a parity with the US dollar at 1-to-1. At the current time that we had spoken to him, the eZim dollar was worth about 600,000 to $1 US, and he had actually said that that was much better than the
low.
The low, which was about 900,000 to 1, which is just incredible to me to have a very clear and present example of such a currency devaluation.
Yeah, that was I don't. Again, I'm going to give an approximation. I'm not fully in the frame, but I think that's the last year and a half, possibly 2 years. And they're not even professional like, say, one of these cunning crypto ICO type sketchy projects where they actually keep some of the money to keep a bid under it. Because anybody who allows something that starts at 1:1 inside a year and a half, call me alive for 6 months, maybe 2 years, that allows something to completely fall. There was no bid or demand for that market. Because they are a resource, they are hungry themselves for the dollar, the dollars themselves. So this does play into, just as a commentary, we're giving you this information. This is real live examples where I do have empathy for someone like Brent Johnson's position is outside of, in emerging, and emerging is such a misnomer, but they've got to keep it's like the Cape of Good Hope. It's the Cape of Storms, actually. They need dollars externally, and they are indebted in dollars. And we're in an expanding universe of currency where, given the rise in interest rates, actually there's a further requirement for dollars, because offshore countries that do not have positive trade surpluses, which is most of them, which is why it's ironic to call them emerging, but are desperate for dollars. And as the interest rates that the Fed is bringing about have kicked, there's actually a further escalation in need. And they're all just a tipping point away from failing to meet their dollar-based debts, and the likes of BlackRock, as they were doing for Argentina, will be intervening to renegotiate, seize a few more collateralized assets, etc., etc. So the offshore African nations, which have a dollar as a secondary currency or even a primary one when you're dealing as a tourist, are going to definitely run out of dollars as part and parcel of this interest rate hike. And that is dollar bullish, ironically, which is not to say that the economics of the dollar is correct. It is, without doubt, over-indebted in the largest sense, and is the largest of the Ponzi schemes, but it's also the most dominantly dug-in one. So in terms of the order, the sequence of currency failure, it will, my scenario, and I continue to assert this, Tom, is that it's from the periphery in that you fail. If we're thinking of a village and walls, the poor and the peasants and the beggars are outside of the main city wall, and then there's many inner walls that go, and the dollar is still in the middle there, and will actually go up as the others fall, because you will see flight out of those other currencies into the dollar. And the key moment for gold, bringing the precious metals back into the story, which we'll get into more, is that actually the pivoting and the real key moment is when gold is moving up in spite of a rising dollar. Speaking of that, we had a little bit of that kind of price behavior recently on gold, and I don't know if you want to delve into that.
Yeah, absolutely, Francis, because, thinking about, and obviously having the experience that we both do of talking about these things from so many different points of view, really trying to get to the bottom of really the drivers of each of these markets. I think that gold, despite the strength of the dollar and the attractiveness of short-term bonds, has held up relatively well. We're just over $100 away from gold's all-time high, and in this environment where you can get 5.5% on holding some of these T-bills, it is. I think it's an excellent sign that gold seems to be maybe anticipating more issues here that are to come, and you know, I think that is a big part, or a big issue that maybe not a lot of people are paying attention to is the debt markets, because you know, you were sharing with me a couple days ago the yield curve inversion, the historic examples of when we break that zero bound again is just incredible, right?
And a lot of those inversions right now are starting to work their way back up. They haven't broken the zero level on all the major 10 years. So for someone who's just hearing about yield curve inversion for the first time, I don't want us to lose you as audience. But basically, we're comparing yields between long-term debt and another. So we're subtracting the short-term debt's yield against the longer-term debt's yield. And at the moment, that's a negative, and that is a non-natural yield curve, because as you head out, the curve should go up. In other words, longer-term debt should pay a higher yield. Why? Because of inflation, you're compounding a loss of value. If you're giving your money to somebody for 30 years, and there's an inflationary effect, there's a compound effect, you should be asking for a better yield to ensure that you're compounding a better number generally. Because central bank inflation is policy. Let's be clear. It's absolutely policy. They will always say the same PR mantra every time. A little inflation good, deflation is very scary bad. So a little inflation is good to bias to that side, too much not good. But actually, inflation is policy for central bankers, because that drags everybody into higher income tax brackets. Most have marginal tax rates, so they can do tax increases without even having to announce a tax increase. The inflation is doing it. They are proliferating. It's an expansionary money system. They keep having to add more. So invariably, that is their policy. So with that understood, the yield curve inversion, with the longer term debt actually giving less yield than the shorter term debt is abnormal, and it's usually a prediction, and it's 100% prediction of a major economic crisis. But the key is, once it reverts back, the crisis comes. You get your headline and your key moment that will then be, it was this, and it gets toe tagged as the subprime event, the dot-com boom, you name your crisis of choice. But that is creeping back up. So there is, in my opinion, a demand destroying event of great scale that is to befall us not too far off, generally. Going back to the gold, though, and the recent price action, we had a spill as the rates continued to be hiked and at the higher for longer, remembering that gold doesn't pay yield. But I want to just expand that conversation into something we were discussing just before this interview. Up until March 2020, and that was the peak bonds. We have staked our reputation, and we're the first to call this. That was peak bonds. You shut down all the SMEs largely of the world, and it was such a contraction in demand and economic activity that you got everybody in fear running into supposedly the safe haven, inverted commas, of the debt markets. And that was peak safe haven ever. Nobody is talking about peak safe haven now in debt markets. Everyone now is concerned about the following. A, rates have gone up, so the governments have to pay more interest. B, the consumer is utterly compressed because their credit cards and borrowing is costing them more. They're consuming less. Similarly for corporations and SMEs, those that survived the events of March 2020. And then you have the tax receipts. Just at the time that government least needs tax receipts to go away and to actually expand because of the problem they're having servicing their own debt on to the banking cartel that essentially borrowed money into existence and said the government must pay them interest. You're having an absolute swing the other way on tax receipts. Instead of going higher and providing some contribution towards those increased interest payments, they do exactly the opposite. So it is inherently unstable. And what that then means is those same governments have to increase issuance of debt to make up for the fact that they're not getting the income they used to get as well, all occurring at once. So they are the buffer that has to fix. And it is inherently heads to the extremes. Rather than being a self-correcting mechanism where you go back to mean in the middle, you get into a doom loop, a spiral to the outside. So right now, in the bond markets, because of the interest rate hikes, you're actually having to issue, which means they're devaluing, you're having to issue more debt into a devaluing market. So the supply and demand dynamics of that are absolutely atrocious. And I'll call that the debts are broadly a short across the board. TLT, we were the first who pointed the technical head and shoulders that validated our fundamental view, was well supported technically, as was the 10-year and many other across the whole spectrum of debt. So debt is death right now. You need to get it out. And the problem is, many people say, well, I'm not exposed to the debt market. Your currency is borrowed into existence. It is the shadow of that human being that walks around. You can't have one without the other. If you do not have the currency, you do not have the debt. If you are expanding an issuance of currency, you are expanding an issuance of debt. So it is like a T-bill accounting. You have an asset, you have an appropriate liability. Somebody paid for it, you borrowed the money for it, etc. So even people that are saying, well, I don't care, you can't siloize debt because it's your entire monetary system. And that's why more people need to understand debt. And you can sometimes lose people's interest when you talk about debt. I've got another key learning I'm going to throw in. This is something new that was pointed out to me and I've properly understood and I've taken on board. It's not always the government with the highest debt to GDP. So most people would say Japan. You would also say certainly the US is growing at whatever their rates. Don't forget the off-balance sheet items makes them the biggest of them all with welfare and Medicaid. But I think they declared at about 120 something right now. Again, someone can put the correct number in the comments. We appreciate it. We're driving. But the private and the business indebtedness is almost a bigger problem. Because the government can continue to print and pretend for a while longer. Of course, we're getting to the D-Day for that game as well, and that's part of a separate discussion. But if a government is very indebted, they can continue to issue and just self-monetize. A business goes out of business if it can't serve its debt. A person becomes part of the welfare state and ceases to be a productive contributor in the tax receipts and now swings to being a detractor. So you want to look at the nation states that actually have very high private and business level debt as well, not exclusively the government debt. Those will be the first to fall in terms of that. By the way, the US has high personal indebtedness levels as well. Business is also a bit shaky. I think someone gave me a stat a fair while ago. It might have flexed a little bit since then. But that 15% of the S&P 500 at one point was borrowing to pay their dividends and adding debt because it made sense at the time during the low interest rate environment. Well, welcome back now. Now you've got a heavily debt-laden balance sheet. You've now got to service that debt, and you are buying back stock so option strategies could moon and smash through their targets, and they were making these super stretchy numbers and becoming multi-millionaires, even billionaires in big corporations. Now you've absolutely controlled fraud, destroyed the business because you took short-termist self-enrichment policies over sustainable caretaker policies for the entity that you were actually representing. And that is, if we were to summarize almost everything about Southern Africa, your questions on this, and even the global Western system, is that we've pursued the short-termism of self-enrichment against the sustainability of long-term good custodianship. And that's pretty much the bitter harvest. And I also refer to, and this is kind of biblical, many people, you mentioned one of your guests was talking about Jay Powell and his legacy. And he'll not do this or that. I was referring to that, and I was saying yes and no. This is not a Jay Powell game. He's not the ultimate controller of it. He serves the people who put him in there, And he's also a victim of the timing at which he gets given the job. For example, Greenspan got away with being called a legend, and Clinton a great president because he said it's the economy stupid. Well, in reality, Clinton was president as a Democrat and returned a surplus as a Democrat because he had the boomer era demographics at 47 years old during his presidency, which is the highest net tax contribution. He should have actually returned far bigger surpluses, and this is where I get biblical, because you had your 7 years of feast and you now have your 7 years of famine. The fact that no one went hungry during the 7 years of feast is not an achievement. The fact that you left nothing in the larder for the guys that have to manage during the 7 years of famine is an absolute cardinal sin. And Greenspan and the Clinton era, and I'm not picking on Democrats or Bush 1 is in the mix there as well. You also had a fairly good demographics of the boomer generation and contribution. But Greenspan, during the globalization and the rolling out of workshops of the world, lowest common denominator of work cost, labor cost, where we got an artificially suppression on inflation, and he explained the productivity miracle. He made up whatever theory he cared to do, allowed interest rates to run far too low, too many major asset booms to occur with revaluations in PEs for both equities, and set the bond alight market, continued the bond expansion that now, having done this 40-year escalator, faces, in my opinion, a 4 to 5 year elevator, and we're probably 2 years already into that. The great, the lift cord could snap, and that capitulation. Markets simply don't go down in the same way that they go up. It's not a 40-year unwind, and many people now, in terms of how they're talking, are realizing this. Peak issuance, and they're starting to see the numbers. And it's kind of funny because we've said, hey guys, there's a cliff coming up, you can't do 300 kilometers per hour in your 4x4, you're going to need to hit the brakes. And it's now almost as if we're still doing 240 in our fancy 4x4 running to the cliff edge, and now we actually see the cliff, and we only now does everyone go, hey, now I see this, there's a cliff. And everybody who had the map and looked at the route said, you're going to hit a cliff. But now you're getting the normal curve, you're getting the bell part of the normal curve, suddenly realize that stuff those other guys were talking about actually is real. And now we're seeing how much new money. We've seen amounts referred to 240 billion in a month of new issuance. Greg Manorino on our YouTube, I'm not sure where he got his number from, but he was saying almost every 24 hours, was it $1 billion? Or I can't exactly remember. Both were a little bit not exactly the same, but there or thereabouts. Now people are talking about the degree of issuance in a market where in the UK you had a complete absence of bid on debt when the Bank of England failed to increase their rates at the same pace as America. And global money can go wherever it wants. Macro money can go search out the yield. Anyway, last point, because I want to say this, and I'm monologuing for too long here, but the search for yield error that Jim Grant used to do great cartoons for, with a guy in the desert desperate for a glass of water and all of that, is over, in my opinion. March 2020 was the end of that, and we stated so the same year. We said capital preservation now is king. And that is why it's good. That is why gold brings us back to the gold discussion. Capital preservation, because you've had gold actually snap back that what looks like a bit of a final capitulation on the interest rates will go higher, longer sell-off, oh, it doesn't yield story, to snapping back with greater momentum back to where it was and slightly beyond with far more zeal. So the momentum, technically we'll look at that and say there's more zip. There was a real absence of sellers, and there was a real chase up by the buyers here that was more dominant and happened faster in a shorter time frame. That's typical of relative lows being put in. And they often, if you turn on a 6-month chart, turn into hammers. You know, you have the small body and green body and the big wick down and then the rejection. These are known technical events that are very supportive for metals. And I would tie the fundamental narrative of people going, never mind the interest rates. If the value of your bond is collapsing, a la the TLT, which was our chosen short that we gave on YouTube many, many years ago now, 2.5 years plus, with a head and shoulder, even before the final shoulder was in. What you've actually got is people are now saying, I want something that's still going to be there tomorrow. And you will so outperform in capital preservation that meaningless yield of 5%, 5.5, especially if your capital value is halving in the space of 2 years, is not going to be material. People want to save what they have. They need something physical, and that's why I think gold has shown a real strength recently, and I think that's the reason why. The focus is on preservation of capital now. The search for yield in a bond environment that is collapsing is not going to be good compensation in this environment.
Well, it's interesting to think about the search for yield, and if you're invested in something that is, yielding right now, as you say, if we talk about bonds, the nominal value of that bond still exists by the end of that term, yet the actual return is going to be far less. I mean, people that understand inflation are going to understand this. But if we look at the other side of that, and really the behavior that this low interest rate environment has driven is driving people up and up and up the risk curve, trying to search for that yield. And as you say, I think the idea that having capital preservation is far more important at this time, and buying things that are way out of favor that might produce a little bit of yield, like some productive gold miners in this environment, I think are going
especially
to
ones that are managing their debt, if I can just interject that, because the debt is the controlled demolition. And my scenario of that will dovetail with some of the more darker entities that we sometimes end up straying into, which I won't over delve in, but the World Economic Forum statement of you will own nothing and be happy. One of the mechanisms that they achieve that, the most effective mechanism that they achieve that, and there's huge disparities of wealth between Westerners and the rest of the world. So the kulaks of this Bolshevik revolution is the middle class of the Western world, and that's our audience listening right now. And they want to disarm and devalue, and one of the most effective ways is they've tempted you into debt, and then they can do what's an uncontrolled interest rate spike. And this is why I say Jay won't even be able to stop that. He won't. It's not going to be popular for him to say, hey, let's have another 5% on top of this 5.5. He'll never do that, even if he incrementally committed to another half. There's already enough pain going on. There's already talk of peaking it out. What happens is these choices get taken out of your hand. And if you have a systemic collapse in confidence in the debt markets, it automatically goes with an interest rate spike. So if no one starts buying debt on any meaningful level, lots of pension funds are essentially bankrupt and aren't prepared to purchase anymore, and are now looking at other asset classes that might have some preservational value to try and pretend. And the government is of various different nations, don't forget this isn't just about America, are all in various degrees trying to support their debt markets. What you end up with is interest rate spike by force of market, not by central banker trend. So no one will be the unpopular guy and stick you in 10, 12, or a super spike that could even be 14%. There was a great microcosm of such an event in the UK during the George Soros crisis, where he made $1 billion and has since funded all his various projects. One of the biggest cash trough events, where Margaret Thatcher went in too high to the Deutsche Mark on the beginning of the ECU, that's before the EU project, which was essentially the bringing together of the eventual euro. And she was too aggressive, thinking, Britain must be valued at this level, and they weren't doing enough in terms of exports relative to the likes of Germany. And that was spotted by the traders. They got super leveraged and they squeezed it. And essentially they took citizens' money because the government foolishly defended that error, which means they added debt and printed more money to be a bid against Soros, until eventually they capitulated. And they also were forced into a spike of interest rates to ward off, because people, to short your currency, borrow your currency and then sell it so that they can build these positions. So they have to put the borrowing rate right up at 15%. And there's pictures and images, and this might be a little bit far back for some viewers, but there's literally traders on the floor frantically, and then a guy puts the phone down and says, Who wants to buy my house? Who wants to buy my house? It's available now, cash deal. He can't afford his mortgage. It's gone from when he put it on at 4.5% to the payment, the spike in his payments, the bank's notifications of your new rate, your new rate, your new payment, your new payment. As it hits 15%, is like a 3x on what he considered affordable initially. And many people have already pushed that affordability. So the fear of an interest rate induced spike doesn't require a central bank to actively move those rates up. They could be forced to allow that to happen in terms of the fact that you have a chronic realization where all the cattle suddenly realize it's time to stampede. Long before the lead steers such as us have been warning this would happen, they all stampede at the same time and no one is a bid in the debt market. That means it absolutely sells off. People that are forced sellers have to sell at any price, and that means if they've dropped 50% in valuation, you get the associated interest rate valuation that goes with that. So I just wanted to clear that up, because some people, they think you couldn't get 10%. No one's going to move it there. If their hands are forced and you're in a financial crisis, you absolutely can. And we've already had a microcosm event similar to that in Britain, and there's been many others. Turkey's interest rates went up to 20%, more recently on the lira. Eventually, those interest rates lose effectiveness, and that was the point Erdogan made as to why he didn't go significantly further. So yeah, let me leave that with you and let you unpack some of that.
I was going to say a more recent example of that is obviously Japan, right? Yep. They're trying to defend that interest rate peg. So they're either their bonds are becoming worth less and their interest rate is spiking regardless of what they want it to do. So then they start issuing more currency. So they're either sacrificing their interest rate or their currency. It's one and the same, to your point earlier. Right?
And I'll be doing a YouTube, thank you for that point, Tom. I'll be doing a YouTube suggesting that you will see the next move up to 1.6 on the Japanese interest rates. So they are going to have to allow the interest rates to creep further higher. We've done our technicals, and we actually were, again, I don't want to sound like a braggart. It's because you do macro technical. If you do macro technical, you see things, and the combination of HVF method. We had a first setup in a new trend at 0.25, and we said you're going to break a half, and you're going to go to 0.6. That was run, and then it pulled back for a while back to 0.25. Then it's hung about at 0.5. Now you've run 0.75. We've got new Hunt volatility funnel structure with a 1.6%. And this is a staircasing event. The first setup in a new trend is often the reversal that sees ever high. So you don't just make that target, you continue to overperform and you get new setups all the way along, staircasing you up. So this is an exclusive. We're calling 1.6% on the Japanese bond market. And I was literally doing that chart on an update to the community, one of the rare ones. We didn't have great Wi-Fi, as you can recall, as we toured through Zimbabwe. But that is going to be a major. That's through 1%. It's through 1.25. It's through 1.5, and it's 1.6. Now, that's to stop the yen, because we're sitting, again, I looked a day and a half ago and we've been very busy, but the yen is very close to its last high, the USD yen that is, of 150, which was a blow-off high and a key mark, and then you had a big pullback on the dollar after the Dixie run that we called, that saw 111 run and actually 114 be the peak. Now you're back up there, and the yen, and I listened to Druckenmiller and others, and they say this is the hardest year to call, there's no trades, and I was like, man, short that, nothing's changed from last year, and short the yen, as long as they're continuing that practice. And the yen will still be a short at 1.6 because the dollar's sitting at 5.5. It just means it's slightly less of a short. And when those announcements happen and those shocks occur, yes, it will get a bid for a while. So there will be pullbacks in that. But it still continues to be the primary release valve because the Japanese were so far out of kilter with the rest of the world in terms of their rates. They started at 0.25 until recently. So there's great trades potentially, not just on the gold market, Tom.
Yeah, it's interesting to try to figure out where those opportunities are. And as you're talking about that, I was wondering how you see Bitcoin in this environment. Is it a safe haven? Do you think it's going to get hit along with, a risk-off event? And how you actually see the fundamental purpose of Bitcoin?
Yeah, so BTC, it's a very interesting one. It's not original. It's a very late stage bear, but I do still assess that there is opportunity for a final flush out. And this comes back to the reference of the demand destroying event. Unfortunately, with the scale and the degree of the malfeasance of our global financial system, we're all lepers in a leper colony now. Every nation state has kissed the chief leper to become similarly infected. It's like a vampire, cult that has to take the bite to be part of the vampirical society. What that actually means is that the demand-destroying event, if it is to come as I expect it will in the not-too-distant future, is going to be a chase for all forms of liquidity. And there are people that are holders of Bitcoin that are otherwise not financially sound or don't have sufficient land, repo, reset, preparation, and various other things. There will be so many aspects to a crisis that there will be forced sellers. So even if we were to start from the assumption it's a very good asset, the point of the matter, much like gold, you could still have a sell-off on both gold and Bitcoin. Yeah. So I don't want the Bitcoiners to think I'm just beating up on them because you are specifically around that. In a demand-destroying event, you will have a chase for liquidity. And that can mean most things of valuation initially go down. However, the better long-termer ones that are going to see this through this will not go down as far and will be snapping back violently far sooner, whilst other things might re-rate permanently. So you look at the relative PEs for the US stock markets, a lot of it driven on debt, a lot of this. I could see long-run PEs in America drifting lower, and PEs in places like Brazil, where commodities are there, drifting higher. You can have them going from 3s, and Russia even from 2.5s, and other things as they become more commercially astute and more almost capitalistic, going upside, and then the P's in the States drifting off. So Bitcoin, the question is, longer term, I think we should be in a bull market at some point in 2024. However, we're still in a possible head and shoulder. We had a blow-off spike. I don't like blow-off spikes for that right shoulder recently on the ETF news. But I would be less comfortable being short Bitcoin than I would some of the smaller tokens. So I still think there's another fall to come. And I will be doing a crypto update on the other alts that we've liked to the short side when we get some time, which will follow in a few days. But Bitcoin still has a risk of a head and shoulder. You don't want it below that 25K mark again. If we were to sell off down to that level and trigger that, there could be possibilities that you're going to see 16s and 17s one more time. That could all be part of a bigger time frame bottoming. You end up with a W bottom. Because I do feel by the time BlackRock is properly entrenched in that, and another key point, I think they've had 536, again, I might be off by one or two, ETF applications have only ever had one decline. You've got to think that at some point they will be approved. But I will also say BlackRock's greatest interest as one of the holding companies of the City of London and the legacy families is actually tokenization and the blockchain rather than an individual token like Bitcoin. I'm pretty sure at some point they'll end up managing the Satoshi wallet on the basis that this guy's gone and it's got to be custodianship, it'll be dedicated to climate change. But that's something that'll come a long time in the future, which will probably complete the circle of this mythical narrative that we've been given on Satoshi Nakamoto. Again, a lot of people upset with that, but more and more people thinking, yeah, it is kind of funny, and the 96 NSA paper. But I think tokenization is the big danger, because essentially every asset we own and hold will soon have an NFT associated with it in the form of tokenization. And that will mean that that asset can be purchased via this proxy on the blockchain, and they will be able to assess by balance sheet individually everybody. And this is part of the surveillance finance that worries me a great deal. So I think, despite BlackRock's interest in the Bitcoin ETF, when I listen to Think Speak, he's really excited about every asset having an NFT stroke token on the interwebium, and that allows them actually to purchase everything. Because if they are controlling the issuance of some token, if you understate the value of your property for the sake of property taxes, they can enforce a purchase at that price. You quickly become rentier society.
So, Francis, do you think there's any other market that we should cover here?
Well, what's interesting for me and applied the last demand-destroying event, which was the March 2020 event, Tom, is that we were doing a lot of cross-valuation analysis. We did gold relative to oil. Now, those are two commodities, as you know, but one is a sound money alternative proxy commodity as well, so it's money. And the other one is economic activity proxy, purchasing, deliveries, packaging, all of that. And if you, like me, anticipate potentially that we will get a demand-destroying event, you could get essentially a delta neutral commodity pairing. They're both priced in dollars, where you could see gold going up phenomenally. Now, we got the ultimate trade, and I don't think you're going to get that again. But we actually, with oil going to zero, we were short oil and we were actually long gold through the COVID period. I would love to say that everyone is going to get the exact same trade, but it's certainly interesting if you're expecting a bond crisis, interest rate spikes, hardship, and a lot of downside, a little bit dystopian, that oil could probably come off. By the way, I'm a long-term macro bull, the commodity. I don't think it's forever. And I think freedom of movement is going to get restricted, and we're going to be right-sizing the demand curve. But I expect oil to be expensive going forward. But you could watch that cross-pairing of gold versus oil. Sound money, capital preservation sound money versus an economic proxy of a commodity like oil. So I don't know if that's an interesting one, but I find it quite interesting.
Yeah, absolutely. And how those two really play in the entire market, as you say, oil ends up being energy for movement for really everything in our economy, and is ultimately a barometer of the health of our economy.
100%. And the other thing with that is some people may not agree with our dollar supposition that actually it goes up first before it goes down. But that way the dollar is hedged down, so you can sell $100,000 worth of oil, for example, in a leverage trade, and buy $100,000 worth of gold, and you're agnostic to whatever the dollar does. So you're not got a currency trade or a currency exposure there. So it's a great long short within the commodity category.
So I think it would be interesting to, if we haven't lost everybody by now, to give a little bit of a detail on our trip. So again, Francis, I'm very grateful to have been invited to come ride with you, come on this trip. We had about 12 riders, and we rode over 10 days. I think we had 3 rest days, so 7 actual days of riding. As I said, about 1,200 miles or 1,800 kilometers of mostly dirt. So it was mostly off-road riding, a lot of sand, a lot of kind of gravel type roads, some fairly challenging stuff for a lot of the guys. But what were some of the highlights for you for the trip, and maybe tell us a little bit about how you, let's say, fit into that group?
Yeah, here's what I love about the trip, and I would say to others, in fact, if there's interest, maybe the guys can leave a comment and say, I'd love to do it, because I mean, we had a 65-year-old on tour, as you know. I would say the average South African's quite a nuggety old boot, but many 55s plus. You cruised it, Tom, as the excellent rider you are. There was soft sand, and we did choose well on our bikes. We had good knobbly tires. Our tour manager is not about riding on tar, and it's about a proper getting off-grid Africa experience. And as you know, we didn't have Wi-Fi. I didn't know what the markets were doing, and it was just plain damn good for me, if I'm honest. So it's a proper switch off on that. And it is so all-encompassing, the tour, and it's almost, I wouldn't say military, but it's like a little bit of basics or boot camp, but in a luxury version for older types. So we had a good bed, we had great food generally, and you got to concentrate on riding and not falling off. Nobody got any meaningfully injured in any way, by the way, but it was still challenging in the sand. Some of the guys that came with the bigger bikes, the GSs, it gets a bit swervy, and they toppled over softly without doing any harm. But it's just great physically. It's physically challenging, it's mentally challenging, and I like active holidays, Tom. I don't want to lie on a beach in the sun for 10 days and just work on my tan. That's not work, and that's sheer boredom. I'd rather, then I'll read a book in front of a fire, and I can do that anyway. I like to do something physical. I like to see the rest of the world. I like to go out. It was citizen journalism for us, because we always have a theme on it. We visited Rhodes' grave. It just forced me to learn a little bit more of the history, to learn and come to more conclusions again about how things are controlled. When this first went past me at school, a lot of this washed over me. As you grow older, I wasn't a historian in my school years. I chose geography. But now I'm backwardly integrating this as I understand and seek to understand the world more. And we never go to dull places. There's always been history there. So there's a bit of history. There's how the other half lived. We saw some immense poverty. We saw some immense open spaces. We saw mismanagement.
Yet we saw the results of that mismanagement. Zimbabwe, I don't know that I've ever seen poverty on that scale. I've been to not the touristy parts of Mexico. I've been, to parts of Asia that are very poor. I've been to parts of South America that are very poor. I don't think I've ever seen something on that scale. And that is a direct regression from what that place used to be, as I understand.
Yeah, and other key almost postcard moments was all of us bikers, we stop every now and then when we're in convoy just to let the guys at the back, because the convoy tends to stretch out and the guys that are taking their time are at the back. It's not a race. I want to iterate anybody who would like to do this. You're not going to be put in some high adrenaline race. You travel at your own speed. We have convoy rules. A guy waits wherever there's a turn. And you hook up, but after a while, after we've done 100 Ks, the front man waits and checks everyone in. And we sit under a sort of a baobab tree, which is pretty phenomenal in itself. And me and you, Tom, were sitting under the baobab tree, and we got accosted. And in fact, the guys, as a bit of a joke, I think I was coming in third or fourth or maybe fifth before me, knowing my views on things. You were accosted by an indigenous African gentleman who was working for, and this is real irony, because we're in a four-way crossing of dirt roads in the middle of nowhere with just trees and the odd goat. We almost ran over a few goats and donkeys, it has to be said. They don't always understand the rules of the road so well, so it's pretty exciting from that perspective. But anyway, the only other collection of people were around two, what we call in South Africa buckies, but they're basically like delivery vehicles, with vaccine aid sponsored people, and all the mothers bringing their poor as hell kids. So you didn't have a food drop or a water drop taking place.
Yeah.
You actually had a pharmaceutically induced event that is clearly funded with reps and 2 vehicles, and the community was told, be here and bring your children, and they complied, and there was big long queues of mothers with infants and toddlers all showing up so it's amazing, even in the most desolate, and it was hot, Tom, it was 42 degrees then.
42 degrees Celsius.
Yeah,
so
we were in the shade and we were knocking back ice water and throwing it over our heads, and we were really, that was the hottest day. So it was irony. That was a point of irony. The other points of delight, because it was generally an awesome tour, was we drove through a reserve. Where do you get to go through a wild reserve on motorcycles and you stop and watch a family of elephants with baby elephants? We have footage of this. We have GoPro footages, photos. Very sad, Tomo lost his GoPro on the final day with all his gear, but I do have some when we did water rafting. But we have elephants, a family of elephants crossing. We stopped at a hide where we were eating dinner, and then very quietly out of the dark, an entire troop of elephants, again with big male, lots of females and wee ones, suddenly emerged in the dark and came for a drink of water. We had a juvenile, I think a juvenile male leopard show up at a watering hole that one guy spotted, and then we were like, damn, how did you spot that? And then we all saw him, and he came out, and they put some lighting.
That was maybe 100 feet from us.
100 feet.
And, yeah, everybody kept telling me, being the only Canadian on the tour, everybody else was from South
German
Africa
as well.
and one German. Everybody kept telling me how lucky I was to see all the wildlife we did. We saw lots of elephants. We saw and got near to rhinos. I think maybe within 20
with
feet.
With a baby. And wild with a baby, that's rare.
Yeah, wild rhinos. We saw a buffalo the one night in Victoria Falls. On the side of the road, we saw...
I was going to say, in Vic Falls, the town, the city, I mean, where do you go where there's an ATM and there's two happy warthogs with their tails in the air?
Yeah.
These gnarly pigs walking around and saying hi to everyone, almost as if they're dogs. Wild warthogs that just choose to chill out. And of course, we had a drink at the boat club to watch some World Cup rugby. Poor Tomo's had to bend to the South African sporting gene. And we were driving back in the truck, and there was a buffalo in the road as well.
Yeah.
So there is a real out of Africa, and I love that nature still wins out. The bird life as well, the extensity of the bird life. We've just stayed in the Karoo. There's people coming to the Karoo in this desert just for the bird life. He talks about the silent and the shy five, and the animals that come out at night, really difficult to spot, the black-footed cat and the aardvark and all of this. It's incredible, the diversity of game and animals, bird life. And I'm talking like a patriot here, but I can tell you if I wasn't, I would love it no less. It's just so awesome to go where the nature still hasn't been entirely crushed, and it's out there and it's authentic, and you stumble on it. It's just nothing, it's not staged. This isn't a zoo. Where can you ride dirt bikes through a game reserve? In any European country you can do that. Can you do that in the States with wild animals in it? That same leopard actually didn't go away from the warning hole. He came within about 15 foot of one of our riders out of curiosity in our camp, which is basically just luxury tent, sort of glamping tents. So it's fascinating, and you hear them in the night. You hear the cackling hyenas at night. It sounds like a witch's coven. I mean, it is just great to re-engage with nature. And I wonder whether you say, hey, I'd love to do something like this, you guys put something together or not, or whether you just go and do your own. Switch off the computer, get off your backside, do something physical because it's good for you, do something physical because it's good for your mindset, do something physical because it reminds you of the big, beautiful world that is still out there to be enjoyed. The situation with the cartel on the financial system is a very depressing psyop, which has some dystopian elements associated to it. I am not a pessimist. I'm not a wallowing black pill dispensing machine. I am purely saying, get out and love life for all the gifts that you have. You were born to live through this era because you're strong enough. Decide that, do it, live it, love it. Come and maybe sit around the campfire with the likes of the two of us at some point in the future on a tour. We can put something together if it's interesting to you, or just go and design one for yourself and do it. But just get out there and do it. This is a macro market channel. Once you position for the right moves and you've understood all the vagaries of this market, it doesn't require tinkering. It really doesn't need you on 9 screens fidgeting with everything every day. Your wealth will come to you. The patience win out. The fundamentals always ring true. The debt has to go down. There is a strong likelihood of interest rate spikes. Make sure you're not vulnerable with that, what I call financial destruction. That's real demolition to your personal finances. Eliminate that, and you're going to go just fine, and you're going to be one of the hardy survivors in this whole game. And that would be my closing statement. Anyone who wants to engage the Market Sniper on YouTube, you're welcome to join our community of hardies, determined to build wealth through reset. There will be opportunities. Markets fall faster, and those actually lead to very, very strong gains when they eventually happen. And just awesome having you. I wanted to say thanks to Tom. I mean, I put out the invite to him, but to actually get up, book a ticket, fly out to Africa, which is it's a scary place to most people that live in the Western world, generally. He trusted us to book him a bike. We couldn't put it in his name. We put it in our name. He paid for it. He trusted us that it was his bike. He got on it. He rode it. And if he needs to sell it, we'll help him sell it, or we'll keep it for him for next year. And he just absorbed the whole experience, and he just fit it in like a glove. And the guys loved him, and they want him to come back. So really nice meeting you in person. You're no longer just an internet friend. I consider you a physical, real friend. He's not a bot, guys. He's real. He's real. So am I, and so are all of us. And we're all going to see you through this. And it's just been awesome to do this quick video with all of you.
Yeah, absolutely. And I can't thank you enough as well for this opportunity and just the experience. Again, to kind of repeat the point that you made, to be able to just ride a road and be continuously warned by the guy that organized kind of all of our stops and stays, to be continuously warned, there's wildlife, don't go too fast because you might hit an elephant or a warthog or a kudu, something like that. I mean, I came within 50 feet of several giraffe, of zebras, all kinds of things that I've never in my wildest dreams thought that I would just see randomly riding my motorcycle. Motorcycles have taken me around the world, and this is another place that I'm grateful to be able to kind of check off, and to be able to see the real side of Africa, the way that real people live and struggle and eke a living out of this place. I don't think we could have seen it more authentically with any other form other than being on a bike, because even in a car, you don't get the temperature change, you don't get the smells, you don't get all of these different aspects that
and
you
the
get
danger,
on
a
a
little
bike.
bit of danger. Yeah.
Well, doing wheelies at 60 plus miles an hour sure makes you feel alive and helps that blood circulate for sure.
We're going to, as a final, I suppose, epilogue to this recording, Tom's been taken for a drive. I thought the best way to see the country is actually to drive it. It's actually cheap to fly Johannesburg to Cape Town, but we just jumped in the wheels and said, rather than hire down there, we'll drive. And he's going to see Table Mountain. You'll see the castle where Van Riebeck first established his place. So it's great also for a little bit of the history, and it's also a very beautiful place. And in some ways, I think South Africa is actually a very good reset place, because it's very cheap if you're on $1. It's already got priced in energy shortages. People are already got homes with solar panels, and I fear that a lot of the very civilized, if we call it westernized nation states, are at a lower state of preparedness for a lot of eventualities that still might come. And the fact of the debt market and the inability to maintain welfare that was promised, and all of these things could see a further fall, a much broader fall in the Western markets in terms of relative wealth than places such as this. So there's something to be said for the frontier spirit and slightly edgier places, in that there's a hardier group of people, they're better prepared, they're more community orientated, and they're self-reliant, and you want to build that self-reliance for sure. You don't want to be government provided with anything. The days of actually getting real value from governance are very certainly gone with this debt game, and they should be treated with suspicion and kept out of your lives to the greatest degree as possible. And watch out for all the digitization that they plan to perpetuate on us.
Yeah, I think one of the points that I wanted to add to that kind of comment earlier was having, and it's something I've said many times on this channel, is that being prepared for these eventualities, even if they don't happen, is not going to make you worse off. Having some type of backup power, as we experience, doesn't make you worse off if you don't have to end up using it. It's just a wonderful piece of safety net that, if you do have to use it, you're sure going to be glad you had it, but hopefully you don't ever have to use it. So Francis, again, I want to thank you for your time, for the invite, for being such a gracious host in your or the country you were born in, and showing me a lot of it. And let us know if this is something that's of interest to anybody. Thanks so much, guys. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.